Everyone is asking themselves the same question. Is this the bottom of the stock market, or is this just a tiny portion of a much larger stock market crash? In this video, I'm going to go over why that question shouldn't even really matter to you and what to focus on instead. So on this chart right here, we have the S&P 500 over the past 25 to 30 years. We can see that there have been some serious dips throughout history. A couple examples of those dips would be when the dot-com bubble bursted, and when that happened, the S&P 500 fell by around 50%. Another giant crash was in 2008 and 2009 when the housing market was terrible and we went into a giant recession, and that was a total of a 57% drop on the S&P 500. The next major drop was in I guess you could say March 2020 with the COVID crash and that disaster there, and that resulted in around a 35% drop. Now here's the thing, the current stock market year to date from high to low is down around 21%. So when you hear 21% compared to 35%, 50%, and 57%, that would lead you to believe that the stock market has a lot of room to drop. But here's the thing that not too many people talk about, is that there are actually a lot of other smaller corrections sprinkled in the S&P 500 that don't have the same attention as these giant drops do. A couple examples of these would be like in 2015, where the stock market was just, or I guess you could say 2014 to 2015, where the stock market was very flat and it actually fell by around 16% from its high point to its low point. There were also a couple significant drops in 2018 and even more significant drops along the way that just don't have the same attention that these larger crashes do. And here's the thing, everyone's always, or especially now, everyone's wondering, is this the bottom and is now the time to buy? And there's really just two types of people out there. There's people that are saying, yes, now's the time to buy, load up, this is a lifetime opportunity. And there's a lot of other people out there saying this is just the beginning, stocks are going to fall a ton more, and sell everything you have. And both sides have good arguments for the most part, but you really shouldn't subscribe to either of those arguments, because here's the thing, nobody, not even Warren Buffett or Joe Biden or Jerome Powell or anyone else, can time the bottom perfectly. And the smartest thing to do historically is just consistently buying over time. There's actually a great quote by Peter Lynch that I love, and it goes, "Far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves." Basically what he's saying is, everyone loses a ton of money preparing for a theoretical correction or, trying to anticipate stock crashes. Then people lose more money than that than they actually lose in corrections themselves. So the main point of the story is, don't try and time corrections or stock crashes, because it's almost impossible to do so. Now here's the thing. Everyone's always going to say, but this time it's different. It was different in 2008. It was different in the early 2000s. It was different when COVID happened. But now, we have a war in Ukraine. We have food shortages coming. We have high inflation. We have interest rates rising. People are always going to give a reason or reasons as to why this time it's different, and as to why this time it's really, the stock market's really going to crash, and why you shouldn't be buying stocks. But historically, it's just not a smart thing to do, to just sit on the sidelines, especially when stocks are low like this. We have some powerhouse companies like Facebook, Disney, even some of these companies like Amazon and Google down significantly. And it's very rare to see drops like this. And just like Peter Lynch said, more money has been lost by investors preparing for corrections or trying to anticipate them than has been lost in corrections themselves. And, missing opportunities is it's sad, So when you see stocks low, it's important to strike with them. I know there's crazy news out there, but even if this is not the bottom, it might be smart to buy anyways, because no one knows the bottom. Because think about it this way. Let's say we look at the S&P 500, the index, S&P 500 index. Let's say this situation ends up being the bottom, or let's say the stock market is stagnant for the rest of the year or the next couple months or whatever. If you sit on the sidelines saying, no, I think the stock market is going to fall a lot more, and you just wait around and wait around and wait around, and that mega crash never happens? What if this ends up being a situation like we saw in 2014 and 2015, where the stock market falls a little bit, is stagnant, and then just rockets up, over the next couple years? If you miss those opportunities, it really, really hurts, especially in times of high inflation. The money you could have bought, the money you could have, taken and then put into stocks at lows, not only will you miss out potential returns with opportunity costs, but also we have high inflation right now, and the value of your dollar will just slowly bleed off. So historically, it's a smart thing to be buying the dip. And let's say this isn't the bottom. Let's say stocks fall more. Then just buy in more when it falls. But if you have to kind of plan for that. So, maybe if you're a little bit hesitant right now, maybe only put like a third of your total intended position, or a quarter, or an eighth, or something like that, and just slowly buying over time. Because what we do know historically is that when stocks are low like this, it's important to strike while the iron's hot, and historically it will pay off as long as you're buying good companies. What I find reassuring is how Warren Buffett is buying the dip in a couple pretty good companies. We have Citigroup that he's buying. We have OXY, CVX, ATV, and HPQ, among a couple others. But it's always good to see investing legends like Warren Buffett buying the dip, because if he's buying the dip, clearly he sees stocks at good levels. So overall, just don't let this opportunity pass you by. Even if it's not the bottom and you think stocks might fall a little bit lower, it might be worth getting into the market at least just a little bit, because if you miss this opportunity, it would be one hell of an opportunity to miss. So start a long-term portfolio. Even if you start with like 2% of your intended position, as long as you have a long-term outlook and you're buying good companies, the odds are in your favor. So let me know your guys' thoughts on this crazy market down below. Make sure to subscribe if you like this video. I post brand new videos every single day, and let's have an amazing week.